All right, I think we should get started. Good morning to you, everybody. Thank you very much for joining today's webinar, bringing together philanthropy and investment capital to further social good. My name is Simon Lewis. I'm very proudly chair of the Australian International Development Network, established here in Australia to promote more and better investment and impact philanthropy internationally. We are delighted to have three very special guests who are beaming in from the US. This promises to be hopefully a blockbuster session around insights and ideas for us here in Australia to learn from what they've been doing around market building, aggregation, and moving philanthropic capital into international development projects. I do want to acknowledge country before I commence, and to acknowledge that I'm here on Wurundjeri land of the Kulin Nation, and I pay my respects to their elders past, present and emerging. And if you would like in the chat just to acknowledge the country where you're meeting us today, that would be marvelous. Also to acknowledge today's session was not possible without the support of Rosemary Addis, who's a professor at Melbourne Uni and is chair of the board of advisors of SWEEF, and also Jennifer Buckley, the founder and managing partner of SWEEF. It's a capital impact fund that is investing in women and the future of girls in Southeast Asia, and we're going to be bringing SWEEF up later in the session as a bit of a case study. And our three panelists today have some relationship with that organization. All right, so just in terms of today, let's firstly introduce who we have in our panel session today. Dr. Pam Ryan, who's joining us from the US, was born in Broken Hill, I understand, Pam, and has been living in the US for many years, and as a trustee of the Tungari Silver Foundation and also the managing partner of Everywhere Capital Group. There's a bit of a story Pam's going to take us through around the role of the Family Foundation and also the Everywhere Capital Group and how they're moving capital into international development programs, and the journey they've taken on with a 100% impact approach since 2012. We have Tim Freundlich from Impact Assets. Welcome, Tim. You'll hear shortly about Tim's role in building the market in the US in terms of impact investing, a co-founder of SOCAP, I think established back in 2008, and we've all heard about SOCAP and the marvelous work that that's doing in terms of building up momentum, aspiration, and action around impact capital into the philanthropic impact capital, and your role around aggregators and democratization and participation in these products. And Catherine, as Chief Impact Officer of the Phillips Foundation, welcome to you. Again, another foundation that's taken a 100% impact approach, very millennial-led. So we'll come and talk a bit about the role that next generation are playing and banging the drum for change and starting to break down some of those old silos around how we think about the foundational capital and creating change within organizations. So yeah, we've got a great conversation to bring and thread in your different perspectives and ideas and sort of give us some encouragement here in Australia that there's a lot to play for and a lot to build on in terms of that momentum as well. When we come to the end of our conversation, I will bring SWEEF in again as a bit of a case study, given you all have a relationship with SWEEF. Pam, let's start with you, please. So in terms of the 100% impact journey you've been on as a foundation and as a capital group, this kind of started back when you did an annual grant to the Social Entrepreneur of the Award in the early 2000s. You learned a huge amount from that. That ended up being a book called The Impact Imperative. Take us through that story, please, and some of the insights that fed into your new thinking and your new approach to invested capital from foundations.
Okay, so I'm coming to you from Tonkinawah, Indian American territory here in Austin, Texas. I think some Apaches may have roamed around here as well. So I acknowledge the elders past, present and future of that Native American group. And I came to Austin, Texas in the late 1980s when nobody had heard of Austin, Texas. So I've been very fortunate to witness the growth of Austin, or unfortunate, depending upon which way you look at it. But certainly Austin has been a model for many cities to say we would like to grow our venture capital, our entrepreneurial community, our ecosystems in the way that you have. Others would argue that the impacts of that on the society in Austin and the marginalisation of people in lower income groups has mirrored that bifurcation that is in other parts of the US at the moment. And so I was here in the very early days, but did my PhD at the University of Texas in the venture capital industry. And to get through my PhD, I consulted to a few at the time, very small startups who became National Entrepreneurs of the Year here in the US. And they paid me at the time in stock. So I was quite fortunate to be in the right place at the right time. And we started a foundation in 2000, a small family foundation, very similar to the Phillips Foundation, saying they are small but mighty. One of our first mottos was, we're a small family foundation based in Austin, Texas, but you wouldn't know it from the size of the ideas that we support. So we started that journey around the year 2000, and we approached Ernst & Young to do the Social Entrepreneur of the Year award. And we did that for about 10 years. And the foundation was part of my work alongside other investing, more traditional investing in venture capital in particular, as a limited partner, not as a general partner. And we spent 10 years with Ernst & Young doing that Social Entrepreneur of the Year award, and it spread to other places and other countries. But after the 10-year mark, because we'd also been providing a $100,000 grant to the winner in Central Texas, we looked at what we got for $1 million in expenditure, and were we making the kinds of amplified positive impacts that we wanted to make with the foundation's grants at the time. And so we decided to research the future of social entrepreneurship. So that was in 2011. We partnered with the Institute for the Future in Palo Alto, California. And what started out as a small $100,000 research project turned into like a 4 or 5 year project that was culminated in the book Impact Imperative, that looked at the future of not just social entrepreneurship, but innovation entrepreneurship as well. And so we learned, and we put into practice pretty quickly, the lessons we were learning. So we learned first, we talked in our preparatory meeting about no longer having silos of investing for good or investing overall. And we started putting into practice our intent for positive impact with the foundation. I manage 5 different portfolios of investments, and we did the foundation first, starting around 2012, 2013. And because the tax consequences were the least for divesting the negative screened stocks and bonds out of our portfolio. And we also started direct impact investing. So we used all the capital potential available to us and switched to 100% impact. And what we found 5 years later was that the foundation portfolio far outperformed certainly the one that was the other fund that was 5 years behind, but each fund progressively did better the further into the 100% impact that they were doing. And we outperformed the market benchmarks. And so we put into practice those lessons. We also learned, and these things I've documented in detail in the book, but we learned things like drop the social. It's not social impact, it's not social entrepreneurship, because everything in this world today is so interconnected that we used to say we'll do the social investing and leave green and environmental investing to others. But what we've learned and what we all live daily now is that everything is so interconnected that to ignore one is to ignore both. So we learned that. We learned that we all who are intentionally trying to do good, we can do harm as we set about investing. So we need to be really cognizant of the ways in which we can do harm, whether it's from the words we used, even using words like in the US, there's a and still highly used term, the working poor.
Yeah.
I hate that word, that term. I also have problems with catalytic capital because it feels like we're setting up a power imbalance of the people with the capital are trying to catalyze change when change should be driven by those people who are at the center of where the challenges are. We also came to learn and understand that impact is a dual noun and a verb, a journey and a process, not just a destination. So we learned all those kinds of things and a ton more, but I'll stop there. But we did put into practice a lot of the things as we got going, including the gender being one of our first screening tools for making investments.
Thank you, Pam. So a holistic and integrated approach, that 100% impact journey for a good 10 years now. And I suppose that myth that we often hear that there's concessionary returns that typically follow for 100% impact portfolios hasn't really played out for you at all. Catherine, this has been not dissimilar to the journey of the Phillips Foundation. One of the insights that Pamela was referring to around the impact environment, it's imperative rather, the book is, you know, as she said, no more silos, everything is connected, think very long-term, collaborations, partnerships and networks are vital and locals need to be respected in the driving seat. Now, your 100% impact approach, tell us about how you've fared and worked with the family to sort of engineer this transition.
Sure. Thank you so much, Simon. It's such a pleasure to be here with all of you. And yes, along with following in Dr. Ryan's footsteps, we came along in 2016. The Phillips family is a young family. The wealth builder was the grandfather. He passed away a bit earlier than anticipated. He had been grooming his grandson to take over the family business. And when he passed away, his grandson was only 26. So there was a lot of responsibility on his shoulders. And the family brought me on board to help them with that, to help them take this newfound wealth and do good things with it. And one of the first questions they asked me was, we don't understand why we're, in the US at least, we are only required to allocate 5% of the foundation's assets for good. But the entire foundation received a tax break and continues to receive a tax break, not pay taxes every year. So we don't understand what's charitable about that. And with my background, helping other families in both in the US and in East Africa, I knew I was with some very innovative millennials. And to date, they have really served as a bellwether for their generation, for ultra high net worth family members. Very quickly in 2016, we aligned all of the foundation's assets for impact, and then we moved on to the family members' private assets, to the business itself. And like Pam, we have seen very strong returns as a result. Like similar to Pam's foundation, we use a gender and racial equity lens for every decision we make. In the US, our foundation is co-located in North Carolina and in Texas, and both states are former slaveholding states. So that's important for us to redress not only the the atrocities that have occurred with the Native peoples, and I stand on Sapani land, but also of the forced labor that was imported from Africa.
Yeah.
So, so we are really excited to be here. We've been influencing a lot of other families and other foundations to move their capital for impact. We've influenced about $500 million so far, and this is something we're incredibly passionate about. We've seen from our personal experience, when we look at an issue that we care about and we come at it with grant capital, program-related investment capital, which we can dive into. That's a peculiar IRS designation here in the US, as well as our market rate investment capital, as well as our influence and our partnerships that we've built. When we bring all of those together to work on a problem, it has a much stronger impact than a 5% grant could ever have. So I'll stop there, but it's such a pleasure to be here.
Thank you, Catherine, for setting the scene around the transition and journey you've been on at the Phillips Foundation. And just acknowledging the point you made about millennials being the bellwether, turning to you, Tim, as one of the co-founders of SOCAP, you've hosted a lot of these passionate and committed millennials. We've heard a lot about SOCAP as one of the big sort of movements around this transition of thinking around how we sort of explore the role of capital more generally, but also I imagine trusts and foundations and representatives have been brought into that conversation. Take us to, I mean, I know you have other roles, Tim, but also the SOCAPs are probably a good way in to sort of think about how the field building in the US has started to sort of gather momentum and what that has meant for the practice of foundations like the ones Catherine and Pam represent, but also for the sector more broadly.
Yeah, I mean, it's a little bit of a time warp, but it was 2008 was the market breaks were coming into the great meltdown. With that, this first SOCAP was, where we sort of invited a bunch of people under the Golden Gate Bridge to get together, and like 600 people showed up as we were looking at our phones at a train wreck back in New York in particular. And that very day, I mean, literally, like people were getting out of their cabs and watching that. And, I felt very much like a tribe coming together at that point, sort of like a group of fellow travelers, if you will. And fast forward, and now there's, there hasn't been a lot of convening in person over the last 2 years, but back in fall of 19, I think there was like 3,200 people showed up from 100, from literally like 100 different countries. And so, I mean, I think that kind of mirrors what's gone on in the impact investing market in the United States, at least. I wish we were saying, during sort of our prep today, I don't know as much of the current state of Australian impact economy, as you will, if you will, but certainly here, I mean, we've seen a real deep sort of alignment around the intersections with and between climate solutions, racial justice, and gender equity. And I think in the last 2 to 3 years, in particular during the pandemic, what I think is a move towards sort of a more holistic systems approach to the intersections, and the fact that they're not these silos, they're not these pillars, and people are having a lot more openness. I wanted to say a lot more difficulty staying in their lane, but I would say actually more positively openness to that intersectionality. And so that's been going on, and certainly next gen, and in particular next gen and entrepreneurs, I think in the US are really leading some of the adoption kind of vanguard. And we have, Impact Assets built up a platform of about 2,000 families and little carve outs from companies and foundations and giving circles, 2,000 different sub accounts that add up to about $2.3 billion, all built from the ground up, sort of by and for impact investors, mostly first and foremost private debt and equity and microfinance and community development and stuff around climate, gender, and racial equity and justice. And so, I think that 10 years ago, this stuff was kind of radical and made people's heads hurt. And I would say at this point, the jury's in. You can set your market rate, you can set your investment thesis, intersect with the thematics that you want to move on, and build the kind of sort of return and outcomes that I think a decade ago, people were just kind of like walking around in the dark, bumping into each other, or the walls of the cave. And now it's a lot more sort of unpacked and clear. And I think that's exciting to see people across the whole spectrum building portfolios. I mean, we certainly are seeing it in all the assets that we're handling, where people are taking things from, grants along the whole spectrum to subordinate and forgivable loans to sort of more senior capital, and what they're doing with their cash, where it sleeps at night, guarantees, what are their bonds doing? What are their stocks doing? What's their VC doing? Like really actually interrogating that whole spectrum. And not everybody's using all the tools in the kit, but a lot of people are at least considering all the tools in the kit before they build whatever thing that they're building. So I'll stop there for, at least for a minute and make sure I'm not going too long, but that's kind of my initial approach to the conversation.
Thanks, Tim. And look, we'll come back and talk a bit more about the role that those aggregators, those donor advised funds are playing in terms of building the market and democratizing in that capital. Because using your metaphor of a dark cave, it sounds like you guys might have found the light switch, and there's something in that you might tell us about. There's a bit of that cave searching going on down here. But when you start describing all those different ways of bringing capital into play, debt, equity, hybrids, sort of guarantees. Certainly, Catherine, on the Phillips Foundation, on your website, you've got a really interesting pie chart where you talk about how your portfolio is allocated across all these different asset classes, right? What does it look like? And again, Pam, for you as well, what does it look like from a governance level when you're trying to lead 100% impact portfolio approach, because you've dismantled the investment committee, granting committee mindset? How do you now govern a foundation with this 100% impact approach? What is the governance?
Sure.
Yeah.
Sure. So I'll jump in first. And we use a lot of different lenses when we're making decisions. Obviously, the legal lens comes first. And as a foundation, there is the responsibility to enact fiduciary duty. But what we found is that if we get really creative, we can create opportunities to have a much bigger impact than just taking the strict legal approach would allow. And additionally, even our trust document, Mr. Phillips wrote it himself. He didn't like to pay lawyers, so he wrote it himself. So it does have some funny quirks in there. So we have to get really creative. And one of the things we've done is we figured out that we could leverage our entire, or not all of it, but for the sake of managing risk, but we leveraged 2% of our entire portfolio, and worked with a number of other very large foundations, including Rockefeller, Kresge, some others that might ring a bell in Australian ears, but to create unfunded guarantee pool.
Yep.
And this is to date our, and we just made a $1 million unfunded promise to cover any losses. And these guarantees are going to financial institutions that are focused on community in the US, and they are particularly focused on women and people of color. To date, our 18 million in guarantees that have been made, we still have a lot more to make, but the first 18 million have unlocked $600 million in capital from other sources. So when I think about how can we get creative around governance and create new structures that unlock capital And I know we'll get to this in a little while, but that's why I reached out to Tim and to Jennifer and said, let's create a new structure. I can't stand the thought of $261 billion sitting on the sidelines in DAFs, just generating profit for the DAF holders, but the DAF creators don't have an opportunity to invest for impact. So how can we get that capital off the sidelines?
Yeah, absolutely. And look, that's not dissimilar to the movement building here in Australia. I mean, our trust and foundation sector is much smaller. I think ours, we're looking at 50, 60 billion, whereas in the US, it's $1 trillion plus. If you look at total assets across all different trusts and foundations, obviously universities are 20% of that, you know, with the Yale and Harvard endowments, et cetera. So huge opportunity to bring that capital into play. Pam, how have you managed the, I suppose, the shades of grey around a portfolio, around, you know, patient grant capital that you might recycle, guarantees, deep impact through to ESG or sort of responsible overlays? Do you know, what governance approach have you taken, or what policies have you enacted to enable this transition to 100% impact?
Yeah, great question. Unlike Catherine and the Phillips Foundation, we had flexibility around our governance structures and processes. So about 3 years ago, we embarked upon a complete revision of our bylaws, of our systems and processes to ensure that we were enacting the 100% impact lens and particularly did not do harm. So we instituted requirements for selecting, training, assessing individual board directors as well as the board as a whole. We revised and continue to revise our investment policy, which defines returns on investment in multiple ways, defines success in multiple ways, defines capital in multiple ways, defines risk in multiple ways. So all those are built into our investment policy. We do and mandate I want to say quarterly, but we're probably not that good, 6 monthly health check on each portfolio. And because while we might invest in one investment that looks like it's met all our criteria in one 6-month period, the next they might have changed strategy, acquired another company, or done something that means they are no longer as squeaky clean as we'd like to think. So we basically revised everything to include doing no further harm and aiming for net positive impact. And our board of directors is very much in sync and signed on. And if they're not, then they wouldn't be a director.
Yeah. Thank you, Pam. And just acknowledging both the Phillips Foundation and your own have a racial sort of gender lens to this, and acknowledging there's this movement around participatory grant making, or sort of, as you say in your book, Pam, you know, local needs to be respected in the driver's seat. There is no substitute. How do you bring the communities of concern into your decision-making processes and bring them around the table to explore the best way to deploy that capital, or to really, I suppose, how do you ensure that you're on the right path around acknowledging then, I suppose, the best way to execute a strategy that fulfills their needs?
We don't bring them anywhere. We go where they invite us, and we have conversations, collaborative conversations on how we can best support what they're doing. And as Catherine mentioned earlier, because we utilise capital in very diverse forms, so whether that be networking capital, where we broker relationships of people who and organisations who might be better suited to support an innovator in an area where we don't have enough local contacts, then we broker that kind of relationship. We do things like these kind of discussions that we're having now. So we try to be role models and mentors. We facilitate discussions amongst groups and experts who might not otherwise get together. If it's something like SWEEF, for example, where SWEEF came to our attention from two separate sources, Rosemary in Australia and the Ellevest investment group here in the USA. And we trust both of those sources really greatly. So that led us to SWEEF, but Jennifer is totally leading that. And I am merely, and our organisation is merely supporting her in her local work. We do not pretend to have the expertise in those areas. We have some expertise that can contribute to what they're doing, but that's the way we approach it rather than bringing them anywhere.
Thanks, Pam. Anything you'd like to add, Catherine, just around the participatory side of your work?
Sure. Yes, we dive deeply into community and ask them what is it they would like, and then how can we best help, whether it's hosting convenings, making introductions, investing capital, making grants. That's been proven. Really, it was proven in international development circles decades ago, and it's finally catching on in the US over the last sort of 20 years.
That's great, Catherine. And Tim, from your perspective, you know, as one of the market builders and catalyzers, if I can use that term, there's something about reading the sort of trends and opportunities to where there might be critical support for a particular product and then bringing that into the market. Tell us about the role you played as an aggregator, and also the role that the Impact 50 has played as a kind of league table around some of the best opportunities, because from a trust or foundation's point of view, there are significant costs in terms of time and expertise to sort of understand where real value lies in terms of impact potential. And I imagine part of the market building we need to be thinking about in Australia is doing something similar. So maybe take us here, some of the aggregation funds and also the Impact 50 and the role it's played in building the market in the US.
Well, I would say, I mean, the basic problem with the impact investing world now, and certainly a decade ago when we started building IA, impact assets, was everything top down, elitist, only very large numbers of zeros were able to do anything close to a sort of an approach to it. And so I think a lot of the to-do, certainly that's been driving our work, and I would posit is also to do, and it very much, I think, dovetails with the inclusiveness that was just represented in the last two sets of comments around, how do you build a stakeholder table, and not a table that you're inviting anybody to, but a table that is indigenous to the place and context of the action. And I think that what we're seeing is the need to, what we're building on is how do we sort of democratize or, open the doors that allow folks to get together in ways that's, truly inclusive, where part of that is not having to be qualified or accredited investors or institutional or this is or that's. It's about being something. And so, that's kind of what we've kind of construct is a way to create a philanthropic endowment platform. So it's a certain part of the capital in people's pocket, so to speak, but in a way that allows folks with actually quite modest resources to act and build, act towards action and collective action together that is like the big foundations get to do. So, I think that's part of the do is it's sort of a democratization to do. I don't know if that's the right word, honestly, but it breaking down the elitist barriers to participation all the way down to community level, I would argue. And then at the same time, in terms of how people are constructing power in the decision-making process, in the construction process, even of the thesis, I think it's one thing to, well, I mean, there's a lot to unpack and all that, but basically we're seeing a lot of really, I think, authentic experimentation and openness to changing the rules of the game. That's not a game at all. It's people's lives, it's communities, valuing communities and constructing it around what those communities need, and the decision-making process is being like allowed to live at the altitude and in the context that they should.
Yeah.
And I think that's the next piece of work that we got to do. Not prove whether or not it's market rate or schmarket rate. You know what I mean? Like, we don't need to talk about that anymore. I mean, we can talk about that too with the wealth advisory world, who's trying to figure out how to get ESG into their public stock and bond portfolios, I guess.
Sure. But also the role that you're playing as aggregator is not only making it more efficient and effective for foundations to engage, and indeed lowering the barriers to opportunity for the fund or the supply of capital, but in terms of how it's deployed, it means that the investee only has one aggregator to deal with rather than 50, 100 foundations, right? So it actually makes it a lot more effective and efficient for them to communicate through to the aggregator and to be assiduous about impact sort of focus, right? Because that's where all of the rubber hits the road ultimately. And so how does the information flow come the other way back through to the likes of TSF Foundation, Phillips Foundation? Yeah.
Well, I mean, how does the information flow? I think from our point of view, it's a bit of it's a two-way, multi-directional street. Maybe it's not even a street. It's like four corners, except there's like 18 different roads coming together, and some of them are coming at slightly different it's three-dimensional. It's not two-dimensional. So I refuse to answer your question. No. So basically, it's like we've got this amazing smart mob of capital, either capital holders or capital organizers themselves, with communities and networks that are aggregating capital and bringing them into the commons, who all have their own intelligence and are bringing their own ideas forwards. And that's pretty plural, right? We've got 2,000. Some of them are 50 people. Some of them are one family. Some of them is a company, some of them a foundation. They all have their own intelligence base, their own network, their own sense of what inclusive decision-making isn't or is. We're sort of reflecting on that. But at the same time, like doing like the Impact Assets 50, this annual scan we've been doing for over a decade of trying to compose a significant sample of high quality impact managers that we feel are, reasonably authentic across the spectrum, with a lot of different, a lot of flowers blooming there. That having that kind of radar on that we're constantly filtering, and certainly in being able to push that back towards the stakeholder base and to give them intelligence, to help them at least get an on-ramp onto figuring out what the heck they want to do together. I think that's all important to do. Organizing information and kind of demystifying it and providing a little bit of aggregate horsepower in terms of examining market, the landscape is important, because nobody's got time in and of themselves to really do a good job, probably.
Absolutely. I mean, this is a huge change management exercise around shifting capital, but it starts with awareness and education and demystifying, as you say. There's a question from Sarah Boyd in the chat. Part of her question is, and I might throw this to you, Pam, how do we better educate the community in innovative ways to aggregate capital and provide solutions for admin operational concerns for doing a PRI in a DAF? So I think obviously PRI is obviously much more defined in terms of the US context, but really she's getting at how do we build this awareness around the opportunities for doing this through a DAF, program-led investment through a DAF.
So when you say a DAF through an aggregated vehicle, like what Tim is doing at Impact Assets?
Yeah.
I think Tim can probably answer that more. In our world, networks are everything. So networks are how we get the deal flow. And I realise I'm about to be in the dark. The sun is set very suddenly here, and I'll have to get up in a moment and turn the light on. So I apologise for that. But I think for us, it's and I know Jennifer can speak to this, how what a journey it's been for her with impact assets. So, but for us, it's about networks. So whether it's through the groups like the Elevest investing group, or in Australia, Melior, or the AIDN, you're living the spreading of the word. Yeah. And so whenever I'm invited, and I think Catherine's the same, whenever we're invited to talk about what we've been doing, we are happy to share. And it was one of the reasons I wrote the book, is because we'd learned so much and really wanted others not to have to start from scratch when we did the way we did. And we happened into gender investing because when we first tried to move to 100% impact, there were no data for assessing impact, and all companies had were their annual reports that said we're all doing good. And so we said, out of pure frustration, let's just use the number of women in the top management team and on the board of directors as a proxy for, and obviously expanded that to other minorities. And that was how we happened into impact investing via gender, and discovered that we were on a winning streak with it, and that all the other research, study after study after study, from groups like organizations like Stanford and Harvard, those kind of studies showing that gender investing really pays off in multiple ways. And now I'm going to go turn on my light because it's quite dark. Sorry.
Well, that's a good probably time to bring Jennifer and Rosemary into the picture, and maybe let's start shifting this conversation to a case study in SWEEF, and position this as a good example of a fund where you've played a role in as an aggregator, Tim, in the US. Is that correct? And trying to help SWEEF tap into the sort of foundational capital and create a bridge into SWEEF in based where you are, Jennifer. It might just be worth, Jennifer, just giving a short overview of SWEEF, and then we can talk about Catherine, Pam, and your respective foundations, your thoughts on this as a product, and Tim, your experience as an aggregator around what you've learned around the importance of bringing this kind of product to market. Thanks, Jennifer.
Thanks, everyone. It's a delight to be here with you today. From the SWEEF perspective, we're based in Southeast Asia, across Singapore, Vietnam, Indonesia, and the Philippines. Our focus is on investing to close gaps for women's economic empowerment. Why that is so important in this region is in critical sectors of the economy across healthcare, education, anything in the food-related businesses, and what we see from a climate perspective, women are really the majority of the workforce in those sectors. And as a result of that, they're really making meaningful change in their societies. And making choices that what we find in this region is they're making choices around the time that they're having families to want to come out and found their own businesses, as well at the same time as we're talking about millennials from an investor perspective. We also see in the region that we have, this is a young region, and we have more and more millennials coming through and founding their own businesses. And what's in common with all of those groups is when they're seeking to build their businesses, they want to do that with both a commercial lens and build very profitable businesses. But at the same time, more often than not, they're seeking to drive change and making a meaningful difference to their societies, often in the areas of improving healthcare delivery systems, showing there's education for all, and showing people in their countries are eating healthily, which leads on to health outcomes, and that food's being produced in a sustainable way in these economies. And it's really critical that we're supporting them from a capital perspective. And what we have in the region is very few sources of capital for entrepreneurs like this. The sustainability lens isn't well developed within the venture capital and private equity environment in this part of the world. And these entrepreneurs are making choices. If they cannot find the right partner that's values aligned with them, then they would prefer to not take on third-party capital and grow their businesses more slowly. And as a result of that, we wouldn't see the meaningful impact coming through. So that's SWEF's focus in this part of the world. And we also support those entrepreneurs to really get very sharp around where diversity is a value driver within their businesses.
Yeah, thank you, Jennifer. And Rosemary, as chair of the board of advisors, there's some pretty impressive kind of headline stats coming around the SWEF fund. You've obviously engaged EMIF, which is DFAT's sort of investment vehicle for the emerging markets. They've taken a position, and you're looking for ways to kind of aggregate in some private capital support behind this really great opportunity. Maybe just a couple of comments from you around how this product sort of fits in the sort of broader ecosystem, and then we can go to Catherine, Pam, and Tim just around their perspectives from the US.
Yeah, thanks, Simon, and thanks everyone for joining us today. As many people on the call will know, I've been around this ecosystem for quite a long time and spent a lot of focus on how we can build out the ecosystem within Australia and also from Australia. And the regions around us, particularly Southeast Asia, are so important. I also look a lot at the intermediary sector as a really key connector in terms of helping to take capital to where the need is in meaningful ways. And it was the strength of the investment thesis and its integration with the impact thesis that got Jennifer and I talking when she first came to Australia a few years ago, and how we could really showcase the kind of approach she was taking. And at that stage, I didn't imagine that I would become more actively involved. But I can say, having looked at many of these propositions around the world, it is rare to see something that has such an integrated approach that's reinforcing of both the investment proposition and the impact proposition, and is striking at areas of great need where there's also significant opportunity, and as Jennifer said, that touch on areas where there's so much room for improvement, but where women are not only leading, but also a big part of the workforce and the consumers who we know make different choices about how they spend money and benefit their families and communities. So for me, it became a very just compelling thing to help ensure that this was successful as part of the ecosystem in our region, and in the process to really bring around it long-term partners from also different parts of the ecosystem, and particularly with the kind of ethos that you've heard today. And so it's been a privilege also to work with people like Pam and Catherine, and Tim. I have been a major groupie, Tim, of impact assets for a very long time. And we need more people like you creating these pathways. But in a nutshell, Simon, that's why I'm involved.
Yeah, thank you, Rosemary. And we understand this SWEF fund sits on your Impact 50, Tim. So clearly it sort of meets the criteria for both impact and financial return, according to that list. Tell us a bit about your ranking or views on it, and then
Yeah, I mean, I wouldn't say it's a ranking, but obviously we've done the reviews of the fund and believe it to be a very credible and high quality one with deep impact, and that's why we've kind of put it into our system, and are also partnering with philanthropic assets that want to. I mean, I think to Sarah's question in the Q&A, a big problem is, it gets to my previous comment. It's like, okay, well, SWEF is in the market raising from institutional and DFI investors, right? And looking for the $1 million plus club, right, for LPs. Maybe I'm projecting a little bit, but bottom line is it's a very rarefied and big ticket environment, and appropriately so because of just the sort of realities of fundraising and dealing with how many investor slots and investor relations and all this stuff. It's just I've been a private equity fund manager before, and it's like, I get it, but it's also really unfortunate for all of the folks who really should be taking this, both participating their energy, their capital into something like this, but also bringing it back to every single sphere of concern, every institution that they inhabit, every circle of friends and family that they inhabit, to bring them into this thesis of of importance that SWEEF is representing and executing so brilliantly. And so I do think that that's why having this this sort of augmentative or participatory structure that's running, almost as like a feeder into SWEEF that we've constructed, and it's just the get-go. So we'll see. We've got a lot of work to do to get it up to snuff. But our hope is that all of those small family foundations and those donor advised funds, whether they be in impact assets or far afield, doesn't matter, and other individuals who would like to be part of this ecosystem of support can do so. No matter how many almost no matter how many zeros they have. I mean, we could push that a little bit more audaciously if we had the bandwidth. But maybe this first run, we're just trying to knock at least one, maybe two, 1.5 zeros off of the train. And I think when we've got an easy structure to do that, which is great.
And the developmental potential that you touched on, Rosemary, obviously 60% of the world's population live in the Southeast Asian region, many of them in a developmental context. That speaks to the upside. Catherine and Pam, so clearly an impact fund on the other side of the world, how does it meet your criteria and sort of stand sort of shoulder to shoulder with the other opportunities you see? And
Catherine, do you want to start with that, given I'm a bit unusual because I'm a dual citizen of both countries and therefore have the bicontinental approach. So, Catherine, would you like to start, and then I can add to that?
Sure. Thanks, Pam. So we met Jennifer, goodness, I want to say 4 or 6 years ago, and we're really, really impressed with her expertise, with her depth of experience in Southeast Asia. It's not an area that we know a lot about. So we really do, as Pam mentioned, really do count on finding teams that are deeply embedded in the community. Jennifer's entire team is deeply embedded, and it's one of the problems we see in the US is that women fund managers and fund managers of color have a really hard time raising capital. And we are not big enough as a mid-sized family foundation to provide all of the capital they need. And so when we find an amazing investment, we want to bring as many of our friends along as we can. And those are institutional investors and also not institutional investors, but DAF holders or even community members. I know Tim well through professional work and collaboration, and I was aware that he was creating these aggregated funds, and I said, may I introduce you to Jennifer? Because I think this is a real win-win. I think this is a way to, as Tim mentioned, democratize impact investing, make it possible for people who care about impact to invest, even if they're not an institutional investor. So we have, in fact, invested in SWEEF through impact assets to help prove out this model. And we are working really hard through this webinar and many, many other avenues to let people know about this innovation. And we really see this as critical to shifting impact investing to make it more accessible.
Yeah. Well, it's a great example of bringing the product development into play as a funder, right? And playing that role on behalf of SWEEF. And Pam?
So SWEEF will be our 13th or maybe even 14th venture capital investment over the course of the last 20 odd years, and the 7th female-led fund. And what I mentioned earlier in terms of our foundation investment in women, basically mirroring the research from very revered institutions like Harvard and Stanford, but also from groups like the Boston Consulting Group, McKinsey's annual report, all the major accounting firm studies, insurance company studies, that when we invest in women in the top management team or in the board of directors, that the return on our investment, not just financial. So women, I think it was the Boston Consulting Group, showed that women get 2.5 times more financial returns with 45% less capital. And so there are a bunch of other studies that show, whether it's a venture capital firm, a startup company, a Fortune 500, a non-profit organisation, when women are involved in the decision-making teams, then performance is superior. And some of the reasons for that is women, because of our different decision-making styles, we raise the collective intelligence of a group. So even if there's a group of 10 men with genius intelligence, if you put one woman into that group, then the collective intelligence of the group will be raised. And the more women in the group, the higher the collective intelligence. So women on those teams make more money with less capital, with less scandal, with more efficiency than if there are only all men on the team. Investing in women also is more likely to have amplified impacts for communities. Women, when they receive income, invest more of their dollars. So I can't remember the exact amount, but for say every 80 cents in the dollar, every dollar earned, women reinvest more into health, education, and other forms of impact, far more than men. So there are amplified impacts for investing in women-led firms. For us specifically with SWEEF, our foundation has significant experience in grant making in Southeast Asia. So we knew a lot of people in the countries in which Jennifer and SWEEF are operating, particularly Vietnam and Indonesia, but also others. And we also knew both the need there for capital and also the extraordinary innovativeness of women in those areas, and the amount to be accrued more bang for your buck when, and that sounds like a very American capitalist thing to say, but we get really good value for money when we invest in Southeast Asia. So
thank you, Pam. Look, and Jennifer, maybe in the chat, you might just put up a link to the SWEEF fund in case any of our attendees wanted to jump on and have a bit more of a look. And then, look, as we're out of time, I just thought I'd just turn to each of our panelists just to say a last reflection, or sort of, I suppose, any advice you'd like to share with us in Australia about moving capital forward, something that you've learned or an insight or something that you want to encourage us on, just a sort of short comment just to close. Maybe starting with you, Catherine.
Sure, I would just say that it truly is possible to grow the pie. You just have to get innovative. It's not that hard. And I would encourage you to try things that are a little bit different.
Thanks, Catherine. And for all the resources you shared on your Phillips Foundation website too, there's some great material there for anyone who wants to look a bit more into that. Tim, just a reflection from you.
I would say, although whether or not we like the term catalytic capital, Pam, you mentioned maybe not liking it so much. It came up, people have been like it. I think the core driving concept between why people are floundering around trying to come up with like what's a deep end of the impact pool kind of capital called, is because people, the industry and the sort of adoption has really matured a bunch, and folks are yearning to figure out some new kind of design principles. And we've talked across a bunch of them, and some of it's about inclusivity and power and rearranging and distributing it. And some of it's about, being highly leveraged and augmented, to really figure out a way that the dollar can punch bigger than the dollar. It's like subordinate things that can unlock and bring in much more cautious capital on top of the shoulders of it, et cetera. Like, it's time for us to push, and I think that at least the market that I'm dealing with is really open, I think, more and more finally and articulately to embracing a more creative sort of impact investing that actually reorganizes some of those core design principles about what it's supposed to do, rather than fights about what the S&P 500's return is in the United States.
Yeah. And look, just reflecting on market building, Rosemary and I were chatting yesterday around different products that can be aggregators like the ones you've developed, particularly aggregating private capital alongside EMIF and stuff, and trying to work in more collaborative ways. Clearly, we've got some work to do. If anyone in the chat has thoughts, please reach out to us. Aidan's always looking to try and provide sort of connect and engage those that have ideas about building some of those aggregators or sort of fund of funds. And Pam, look, as our Aussie and sort of US representative in this room, great to be giving you the last word of encouragement. I know you said there was something about Australian audacity, so maybe you can fire that up in us as we close.
For us, it gets down to, do we want to keep investing in ways that might do harm? So I really like Tim's use of the word cautious or term cautious capital, but that doesn't quite fit with the audacity that I see in Australians have a go attitude. And I think we, as an Australian and an American, I see Australians already doing a lot of positive impact work. They just utilise different forms of capital in different ways. And I think the work that Tim's doing in building an aggregator vehicle that really does bring the concept of crowdfunding to being able to, any of us being able to invest in organisations like SWEEF, which can then have amplified impact. So do we want to keep investing in ways that might be doing harm, or do we want to minimise the harm that we do and invest with net positive impacts that are potentially amplified impacts at a time in the world where not just the planet is screaming at us to do differently and do better, but the amount of division and polarisation, and we see that here in the US far more than in Australia, that if we cautiously and consciously and intentionally invest for positive impact, then hopefully the world will be a better place and will survive what the planet is telling us is wrong at the moment.
Thank you, Pam. And yeah, getting everybody to read that book as well. I think there's some real gems in there, The Impact Imperative, and your words certainly ring true in terms of the Philanthropy Australia conference last week around what's obviously been a sector looking at more sophisticated and strategic grant making. The next big paradigm for the trust and foundation sector is this endowments piece, and how we bring the capital into play, such as your foundations, Pam and Catherine, and Tim, the role you've played to be the aggregator, democratise, lower the barriers, improve efficiencies, effectiveness, insights, and awareness around how to do this. So there's a lot of inspiration that I hope the attendees got from today's conversation. We will record it and share the recording in the link. Rosemary and Jennifer, thank you again for sort of sharing SWEEF up as a case study, and best of luck in your capital raise. And will this be more of many conversations across the very long, wide ditch that is Australia and the US, but we certainly look across to you for inspiration, and thanks for your insights that you shared today. Thank you so much.
Thank you.
Thank you, Simon.
Hey, thanks, Simon. Thanks for having us. Bye.
Bye-bye.